Hey guys, welcome to the Silver Report. Here we are. It's Tuesday, February 14th, 2017. With gold currently trading at $1,225.40. Silver still holding at $17.96. Let's get into some of the economic news. We can expect big waves today as Janet Yellen is preparing to testify before the Senate. And we already know that she's been coming out and discussing Donald Trump and his policies and how they're going to affect their program over at the Federal Reserve. And we also know that she already has announced that she's a big fan of increasing the interest rates. Of course, they're coming out with their threat, falsely raising interest rates. They've been saying this for years. It's not going to happen. They promised 3. We are not going to see it, but it's really a tool used to beat down some of these emerging markets. As we saw Treasury yields soar, we also saw the price of gold and price of silver. It was an attempted smash down, but we have silver still holding at $17.96. So what we have Greece coming out, and the economic crisis is expanding. They've released some numbers about Greece's economy, and right now they're saying that it's performed much less than they expected. They expected a much larger production, but they see that there has been a contraction in their economy. The big news of the day is not Janet Yellen beating down the markets with her fake threats of raising interest rates, but it's actually China. And China is printing more cash to create more liquidity. They just did this last month, a large amount. They're also needed to do it again. Apparently it was not enough because we have a major crisis brewing over in China that is building up. We have China added more credit last month as well than the equivalent of the Swedish and Polish economic output. It's revving up growth and supporting prices, but also fueling concerns about the sustainability of this spree. Aggregate financing, the broadest measure of new credit, climbed to a record 3.74 trillion yen. That's 545 billion in January alone, exceeding the median estimate of 3 trillion yen. And so what we're seeing, this credit surge, it highlights the challenges that are facing Chinese policymakers as they seek to balance ensuring steady growth with curbing excess leverage in the financial system. So what we're seeing is this is not a way to reel in this massive China debt problem. China's learning what other central banks realized decades ago: trying to control monetary aggregates in a modern financial system is next to impossible, said James Lawrenson, Deputy Director of the Australian China Relations Institute at the University of Technology in Sydney. And so China's major state banks tend to splurge at the start of the year. They are seeking to maximize profits, but what we're seeing is that allowing these loans to continue, this is not a policy designed to conquer China's debt burden. In fact, it's increasing to it, and the mounting debt that is crushing China right now is going to eventually, they have bubbles forming all over. They have currency issues. This is why they're pumping liquidity into the markets. They are propping up the markets. And we know that this is going to affect the American economy. When this market collapses, when this debt bubble explodes and collapses, and we see they're unable to sustain it, that's why they're creating more cash, more increase in currency, more increase in lending. In fact, the broad M2 money supply, that's spendable money, cash, assets, it increased 11.3% from a year earlier, the same pace as the prior month. It becomes more and more difficult to imagine how the fight against asset price bubbles and rising debt levels might become a success, at least in the short term. It really shows China's financial market is still under construction, but all the markets at this point are interconnected, along with what happens in China. So we have some trouble brewing. Janet Yellen has been known to drop some bombs in her speeches to break down some of the enthusiasm in the United States. And so we are looking for some major turbulence coming up. But when it comes to China, the way that it's interconnected, we see on the Dow Jones, this massive stock market rally everyone keeps talking about. We see that Apple's one of the major companies on there. We see Nike's one of the major companies on there. So these these foreign operating companies that are intertwined into our stock market are going to be touched as China comes crumbling down. All right. Thank you guys for joining me here on the Silver Report. If you like the content, be sure to subscribe, like the videos, share the videos. I thank you so much all for stopping by, and as always, stay safe.